Hello and welcome to BQ Prime. You're watching this interaction with Ganesh Benzoplast. And joining me is Rishi Pilani, who is the chairman and managing director of the company. Ganesh, to begin with, give us a brief sense of what are the kind of business lines that you have and how are they performing?
So basically, we are divided into two main verticals. One is what we like to call the infrastructure division, in which our liquid storage resides, our rail business resides, um, and our EPC division resides. And then the other is a chemical division where we have our three main manufacturing plants. Two are for your basic materials like sodium benzoate, benzoic acid, lube oil additives, and the third one, which we acquired recently, was for manufacturing ethanol, the fuel grade ethanol.
Hmm.
So
So,
these are the two main divisions.
so give me a sense of the revenue breakup and the EBITDA breakup for them.
So see, in the more or less, the two divisions are positioned about 60-40 towards chemical infra, where 60% is with chemical and 40% is with infra. Total overall revenue last year was about 420 crores.
And blended margins.
So blended margins, you would say, see, on infra side, we get about 50 to 54%. And in chemical side, we get about between 7 to 10%.
Okay, and that's one of the reasons why you are looking at a demerger as well, right?
Yes,
The
yes,
warehousing, liquid warehousing, or liquid, you're separating it from the chemical manufacturing, which is there.
yes.
When do you see that timeline coming in? Is there a timeline for the demerger to be completed?
So, see, we have got the approval, but the thing is that there is a old technical issue with the court matter, which we are hoping as soon as it gets resolved, we are everything is ready to for the demerger, but we are waiting for the court order on in that matter.
What is this matter regarding? If you can give us.
It's matter regarding an old creditor, so there is some technical point on which it is stuck.
So it's stuck at the NCLT
No, 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 no. In High Court.
in High Court.
Yeah.
Okay, and do you expect this to be resolved in within the current financial year?
I wish I had some more insight into how the court timelines work, but all I can say is ASAP. That's what we are
Hmm.
looking at.
Uh, you have recently, raised nearly 27 odd crores through QIP,
Yeah.
where you have given in stake to existing investor Malabar, and you and the promoter companies have also taken infused funds through that QIP. What is that? What is the purpose of that infusion which you have done? And once the demerger happens, where is it going to rest in?
Uh, So this Sajid, we are developing a new LPG terminal, a state-of-the-art 60,000 tonner LPG terminal in JNPA in New Bombay, the part of the infrastructure group. So that's where it will reside. And the funds that we have infused right now are going to be utilized towards the equity portion of that project.
What is the total cost of the project, and what is the debt equity you're looking at?
So total project is about 550 to 600 crore range, and looking at the debt equity of almost you can say about 30-35% equity and balance debt.
To get an idea of the balance sheet, Rishi, what is the current gross debt which is lying on the consolidated book today? And when you demerge, how much of this debt will move to the EPC and how much will move to the specialty chemicals?
Yeah, so total gross debt on the books would probably be around 8 to 10 crores today. Um, and that also negative debt because we have fixed deposits to the tune, a much higher tune in the banks.
Hmm.
Um, uh, so once the demerger happens, this entire debt will be split between the chemical and infra divisions, depending on there is a ratio of how this will get divided. But I would
Hmm.
say, you can say about 50-50 would be the division between the two.
And so the new debt capital which will be raised will be for the infra division basically,
Infra
right?
division.
So around 300 odd crores would come in that we will have to raise
Yeah,
because
three to 400. Yes.
3 to 400 and remaining you expect internal accruals and the QIP that you have raised to allow you to infuse funds.
Yes, and we have tied up for a JV for this new project with BW LPG, which is world's largest LPG carrier company, having more than 300 LPG ships and other assets, and Confidence Petroleum, which is the largest retailer of LPG in India.
Which
So,
petroleum is
so
that? Sorry, I didn't hear the
Confidence Petroleum.
confident petroleum. Okay.
Yeah.
So,
So not only they'll be participating with us in the equity,
hmm,
but they are also giving us a guaranteed our revenue through the terminal. So which
hmm.
sort of assures uh, the project viability.
To get it clear, I mean, it's around 500 to 550 crores of project which is coming in, where which will be in a joint venture format, which where you will be holding an equity, PW LPG will be holding, and Confident Group, Confident
So BW and Confidence will together come in as a single entity,
single. Okay,
and we will be one entity. So there'll be two entities.
okay. So is it a equal JV?
In terms of voting rights, yes, but they do have a 5% more economic interest.
Oh,
So
so
it's a
you will have
45
45% and they
45.
will have 55%.
Yes.
Okay, and they will be the assured client for all the LPG that comes in.
So we are free to market the terminal to whoever we want to. So there is no restriction on who we can sell the space to. But every month they have given us an assured revenue out of that terminal also. So
Okay.
apart from their business, we are free to do any other business
So
also.
when you say there is the size of the terminal would be 60,000 tons, what portion would be in-house capacity, which means that your partners will be bringing in, and what how much will be out for marketing or using it for third party?
So generally, the way LPG terminals operate is that a ship will come in, which will occupy the entire space. This is quickly evacuated, and then the next ship comes in.
Hmm.
So it's not in terms of how much out of 60,000. It is that they have assured that they will handle so much tons every month.
Hmm.
Apart from their tonnage, which generally in LPG terminals, what happens is once a ship comes in within 4 to 5 days, it gets evacuated.
Hmm.
So apart from their tonnage, we can then keep selling the terminal for other customers.
Okay. So
It's a throughput business. It's not a
okay.
capacity.
Okay, cool. So it's basically using your excess capacity and rotating it as
Correct.
clients
Absolutely.
as ships comes in basically.
Yes.
And what kind of potential that JV will have in terms of given that you have the basic minimum guarantee of uptake which has been guaranteed to you by the clients or your
Mm.
existing partners. What is the kind of amount or volumes that can be used for increasing your revenue there?
So, see, to analyze the potential, what you can see is that every LPG terminal in India works at between 80 to 100 throughputs a year. Uh, and for this terminal, every throughput amounts to about close to about 7 to 8 crore rupees.
Hmm.
So you are looking at 80 into 7. That kind of a upside is possible.
Hmm.
Uh, on average, even if you look at the worst case scenario, you should not be somewhere between 200 and 250 crores of revenue.
Additional revenue that can flow into the EPC or the
Infra.
liquid infrastructure business which is coming in,
Yes.
and that would be at a margin of 70 to 75%.
Yes. Yes.
So your blended margins are expected to go for the infra and the LPG combined. What is the commercial date expected for this? Is there a timeline of capex completion?
First quarter of 2026.
2026. So it's a 2 year, almost 2 year, wait by when you can. Is there a phase wise opening as well, or is it
No,
one
no,
one shot?
one shot.
Okay. So what the street is more interested is in the new business which you have brought in, which is the LPG infra, which is coming into play in the next 48 months, or which will be there. and your infra business. How do you see this businesses together growing over the next 5 years, I would say? The kind of potential, and is there need to increase the capex for from your end as things move further?
See, as of now, we are the way we look at it, Sajid, is that we are looking at a very, very high growth phase in in India for the next at least 1 decade or more. The reason being that it's primarily driven by not only the infrastructure push of the government and the growth in terms of manufacturing in India, but also the basic things like population growth. We are adding about close to 150 million people every decade. That's like, many countries together. So the demand for what we do, we cater to the basic chemicals, which are like sodium benzoate, which is a food preservative, lube oil additives, which are basically the additives you need wherever you need lube oil, which are engine parts or whatever. Then we are making ethanol, which is for blending into petrol. uh, from storage side, we are looking at storing all the essential commodities, which are the edible oils, which are LPG starting, then all the basic raw materials for manufacturing plastics, your foams. All these guys are our customers. So we really believe that this is the ideal time to be in this space, both
Hmm.
in terms of manufacturing and in terms of infra storage. uh, while I do not have an exact number on the growth, but looking at the potential, I don't see why, on average, over the next 5 years, we should not have an upwards of 15 to 20% growth every year. I mean,
Excuse me. Uh, it was interesting to understand your business, Rishi.
mm,
Thank you very, very much for joining us on BQ Prime today.
thank you. Thank you.